Welcome to Momentum Monday. Today is July 28th, 2024. Howard, welcome back.
Thanks
on
for
the
holding
trip.
support. Thank you. Can you hear me?
Yeah, of course. Anytime. And while we were traveling, basically we saw a big rotation out of large caps and into anything below, anything from mid caps, small caps, micro caps. I've been talking about it, like Russell 2000 has been lagging for a very long time, basically for the entire year. And before that, CPI surprising report that came a couple weeks ago, CPI, the Russell 2000 was flat for the year. So it went up like 11% since then. So it's playing a quick catch-up game as the market is betting that inflation has been defeated and the Fed's next move is very likely to be a series of cuts. And as that happened, we saw a rotation out of large caps. Everyone has been talking about how up until a few weeks ago, market breadth has been dismal, how only a few stocks have been going up. Now that's not the case anymore. The Nasdaq 100 is down about 8% since its all-time highs from a couple and a half weeks ago. We saw a few, heavy distribution days as people were probably reducing their overexposure to those select few names, mega caps, and nibbling on smaller caps. And as I mentioned, it's not just smaller caps that are outperforming or setting up. We also have mid caps looking very similar, and also micro caps. So it's just a rotation out of large caps. And since the three most sensitive to interest rates changes industries are absolutely outperforming since July 11th when that CPI surprise came. And we're talking about regional banks. They're the leading sector since then. Straight up, didn't even go sideways. It's just being straight up since then, despite all the talks about issues with commercial real estate. The market doesn't care. The banks have been the number one performer in the last 3 weeks. Also, home builders also straight up. I mean, they had a little bit of consolidation last week, but also near 52-week highs. Home builders and anything related to
what's the weekly look like on the home builders
to home renovation. It's also trying to bounce, like anything you can think of, like from Home Depot to restoration hardware and some of the others. Furniture stocks are starting to perk up to Zillow and Redfin. Obviously, they're still in a building huge bases near their 52-week close, but they've been perking up alongside home builders. They usually have high correlation. And then the third sector that usually outperforms when the market expects rates to be cut is biotech. Also, big move in biotech in the past few weeks. As you can see, it's built a huge base here and it's setting up near its 52-week highs. So those are really the three big sectors, and we saw that outperformance back in November last year when the Fed, for the first time, they said that we are most likely done with raising rates. And what happened is that in November and December of 2023, those three sectors, biotech, regional banks, home builders, they went up 50 to 100% in that short period of time. And they absolutely outperformed anything else. But at the time, we also saw a rally in tech. So this time, things are a little bit different because tech is pulling back. Obviously, still in a big uptrend, and wouldn't be surprised if it just build a new base. But as of right now, we're seeing that rotation out of mega cap tech into really anything else. What are you seeing?
Yeah, I mean, the same. I think. I mean, the number one thing is if you'd said, the Ryan Dietrich posted some quote, but if you'd said the Magnificent Seven would be down, 10%, 7%, 12% since the highs over a month. And
also semis. I mean,
semis, but yeah, if you had said that these things would be down and the market would, the small caps would rally. So I mean, fundamentals are such that people are still risk on. That it just proves that there's some rotation, and if you can take 10% out of the FANG, you can see how much, if the money's not coming out of the market, which it isn't, right? You can see how much it can move small caps. So the question is the small cap move for real? Listened to 100 videos, looked at 1,000 charts. It feels like just the magnitude of that small cap move, IWM, is real. If rates are going to start coming down and inflation's under control, that's good for small caps, right? So risk is still on. And I think bond-wise, people will start if rates are going to come down, people will start positioning out longer term yield, right? Which isn't necessarily bearish. It's just people will take money off the sidelines, right? Like it's sitting. So so far so good. I mean, if you had told me like the headlines could be this bad, and combined with tech stocks rolling over a sharp pullback, this is pretty good result so far for all the negative headlines. We're going into this week. Tensions continue to heat up in the Middle East. There's going to be
all the military stocks have been on a tear lately.
Yeah, that's a good point.
Lockheed Martin up several weeks in a row. That's a weekly.
Is that an all-time high, Ivan?
I think it's an all-time high. I know the other military stock like NOC also breaking out. GE. I like actually the entire sector. Here's the leverage ETF for defense and aerospace. It's at new 52.
So 3 times leverage ETF for aerospace. I gotta love that. Okay, well there you have your trading vehicle. I mean, it's always been a good business war. It feels like everybody wants to start a fight. Turkey threw their hat in the ring today, saying they're ready to, Erdogan said, I don't think Turkey's ready, but Erdogan said he's ready to go into Israel. Everybody's saber rattling, and the market is expressing it with defense stocks. But at the same time, home builders are going.
But gold is not rallying. Gold is pulling back. So I don't know.
Gold.
And oil is, kind of holding, but oil is also not rallying. So
yeah, seasonally, this is an okay period of time. I just look at the rotation and go that the prices are saying don't get scared. If you pull up like NVIDIA or Qualcomm or the semis, you can see this is the first time they've been oversold. I was listening to a few podcasts. This is the first time they've been oversold in 5-6 months, and they're still in uptrends. So generally, you buy those dips. I'm not saying I'm buying them, but because but like if you look at Qualcomm, there's a stock that broke out. Pretty big breakout. It's had nothing but red bars, so it's oversold into a rising uptrend. So generally that works, but you see with AMD it didn't work. Like AMD's just gotten destroyed.
Yeah.
So again, there's something for everybody out here. I haven't been buying any, nibbling on a couple ideas on the indexes side into this pullback, but I think there's some kind of change of tone in the tape. You've got risk on in crypto, you've got risk on in biotech, you've got risk on in small caps, but big pullbacks, even Eli Lilly, which was what
definitely the weight loss stocks definitely also pulling back.
You're still in a massive uptrend, but down 15% is a real move. So you're cleaning out some froth and money's starting to rotate, but a lot of uptrends. You want to make sure you clean your portfolio in times like this to make sure that you're not in underperforming. If we are going to move into this small cap kind of world and rates are topping out, you want to be a little more careful with stock. You don't want to give, stocks that are struggling any more room, right? Otherwise, you end up with stuff like fintech. Like if you pull up Square and PayPal, all these companies that rolled over at the start of 22 and just have been dead since, right? And this isn't just about company performance. This is about margins in an industry that may not come back, right? And Stripe may be taking all their business. You see it with Nike, you see it with Starbucks, you see it with Disney. People are holding on hope on some of these companies, and they're not really taking a look.
Yeah, they've been considered blue chip for so long, and safe place to park your money, and you shouldn't fall in love in any stocks because business models and business environment can change, and those stocks can have 50% crashes even in a bull market.
Yeah. Again, I can't give you the case study on Lula. I've been out of it for a while. I can just say when the stock was at 500 a year ago, we all knew there was going to be competition from Vuari to everybody.
So many, yeah.
Not much has changed in a year except the price, right? And so if you're not indexing, stock picking and you're not willing to like curate your portfolio and manage positions, this is going to be a tough market because there seems to be some huge rotation going on.
Yeah.
And ETFs do that for you, right? They're market cap weighted. So every 6 months they do that for you, which is part of the benefit of why indexing works for most, is because it does the pruning that you are too scared to do. But there are some major changes going on. And if you're not curious and updating your watch list, which I've been doing furiously, right? Because names that, and that's where we have the trends with no friends list that we put out every day, is we're trying to find things that are working that no one cares about, and because they could become household names. Not like Nvidia is going away and Apple's going away, and Amazon and Facebook are going away, and they could get stronger. It's just that there's just this rotation at hand. What else was I going to say? So I would say be pretty vigilant so that your portfolio doesn't get overrun. In terms of other things working, I'm just going to go through. I think you covered a lot with home builders. I'm looking, ICE. So on the degenerate side of my portfolio, right? I was going to say a lot of the exchanges are working. ICE, CBOE, CME, NASDAQ broke out, and DAQ. So again, this goes to risk on. There's volume, there's trading, people are repositioning. That may not be great for brokerages per se, short term, because there's uncertainty and volumes kind of contract. But with options and everybody all the hedge funds kind of repositioning, you can see with the NASDAQ, CME, ICE, and CME doing well, that there's a lot of hedging going on. There's a lot of options activity going on. There's a lot of index movement going on, and the vol's good for those changeovers. So the degeneracy continues elsewhere. The banks, Goldman Sachs continues to just that we've been recommending forever, or it feels like I have since about 400. And then in the crypto side, it's Bitcoin and Solana continue to be, the leaders.
Yes, this seems to be setting up Bitcoin itself. Yeah.
Yeah, Bitcoin and Solana are setting up. So I'm just going to look through and see if there's anything else that I've kind of missed. And then on the weak side, and then healthcare, obviously, Ivan continues to do well. Large healthcare stocks, so United Healthcare and stuff like that.
Yeah.
If there's anything else that I missed? Nope, that's it on my end.
Yeah, I mean, there's so much. I mean, for a year and a half, we've been listening how people have been complaining that market breadth is so bad. But that year and a half, that probably ended 3 weeks ago, will probably be remembered as one of the easiest market to trade, just because all the action was happening in just select 10 to 15 names that were super liquid that you can put any size you want. You can get in and out with options or stocks. So it was much easier to trade. And now that we have that rotation into small caps, and there are so many more stocks moving, yes, but most of them are not as liquid and they're trading much choppier. So now that we have a much better breadth, I think we have a more difficult trading environment in general for swings. At least that's my opinion. So you know, let's see where things go. For me personally, it was much easier when we knew that, you know, the money was going into like the Mac 7 and a few others. And now you have to do a lot deeper homework and look for you know, many more names.
It's a good investment because if you're a small investor, you might have to get off 1 to 5,000 shares or even 500 shares. You know, small
But
caps.
still, the liquidity is not there in those smaller caps.
Even for 500 shares or 1,000 shares.
Well, it just depends on the name.
Interesting. Well, then you can, yeah. But then I don't know. I'm indexing mostly, so I don't see it. But you can just feel the rotation happening, and a lot of it is related to the general economic trend, which is rates coming down and inflation hopefully maybe showing signs that it's under control. Well, no, listen, earnings has been so far kind of, you know, full with a lot of drama. I mean, there's a huge week of earnings coming up this week for the next few weeks. So
Yeah.
just keep it if you own a lot of stocks, and you should just make sure that you're checking when earnings dates are so you can be prepared for the volatility. And you know, we'll check in next week.
Yeah. All right. See you next week.
Have a good week, everybody.
You too, Howard.
Thanks, Adam.